We're looking at a continuation. More and more factors are piling up, leaving us to realize that this isn't its own event. The financial crisis never really ended. This is simply part 2. The financial system was supposedly made to be much stronger and impervious to the shocks experienced in 2008. No more Lehman Brothers and Bear Stearns. No more massive bailouts. No more overwhelming calamity. Just central banks graciously taking care of us. What a joke. You came here for the truth, so let me unveil that for you. Today I have 3 major topics. I want to look at the fund flow data. It's going to explain exactly where the big investors have been putting their money. I want to look at what's going on in Hong Kong. Extremely important to see how this has all played out. And I also want to talk about HSBC and so much more. Let's get into it right away. Third quarter fund flow results show a continuation of long-term trends. This is something that I have been covering for a while. I have shown you the data either from the EPFR or in this case Lipper, and it's very important to track and trace the progress where the money is moving to and from. If you simply look at the stock market, for example Amazon, well, I own 7 shares of Amazon. I want to see how well they're doing, and they look at the market cap, they maybe look at the PE ratio if they're a little more advanced. They're simply looking at the share price, or maybe they go into their portfolio on their trading account and they see what the current valuation is. But they do not track and trace the deep details which would tell you the whole story, or at least more of it. The important part is located in this paragraph here. Money market funds have not seen this level of net inflows since the global financial crisis. The group's net inflow for Q3 is its 4th highest ever. Those previous times were in the financial crisis. People have to understand what's going on with the investors and where they are putting their money right now. They're looking for safety. They're also very unsure of what the future has in store. So they put it in something like a money market fund because they believe that it's safe and they can hold it there until a time appears in which they can invest into something with potentially more profit. These situations only come once in a while. It's not as if you're going to hear some bad news and then the next day people are just going to start putting their money into the money market funds. There has to be trends. There has to be a series of events, and we have that today. Just to cover some more information here, the third quarter net fund flows for Lipper's fund asset groups, including both mutual funds and ETFs, continue the trends that we've seen for the year to date. So what's been happening all year long, as I've been doing these videos every day and you've been tuning in, we've been seeing this happen the entire way. If you want to get all the details, all the numbers, it's in here. This is directly from Lipper's own site. You can see it for yourself. If you're interested, there will be a link in the description. Fund asset groups, including both mutual fund and ETFs, you can see on the right hand side. Money market funds have seen a massive inflow, whether we are looking at in the third quarter or year to date. On the opposite end of the spectrum, we see equity funds which have seen outflows. I have talked about this repeatedly over and over and over again since, let's say, the third quarter of 2018 up until the present. In general, there has been equity outflows. And why? Because we have seen the concerns piling up. They've been mounting. This has been basically a year at this point, and the majority of investors that are unaware of what's going on are simply hanging on to what they have with the belief that there will be a new round of quantitative easing that will send stocks higher. HSBC to cut up to 10,000 jobs in drive to slash costs, according to the Financial Times. This is something that I have been showing you over the last little while. Major companies, particularly in the financial industry, have been eliminating positions. And it's not 100 or 200 here and there. Hey, that happens all the time. We're talking about, in this case, 10,000 jobs, and they already slashed thousands of jobs. All of this is piling on at a time in which we see weakness globally. This is one company here that is going in line with the trend. All of them seem to be doing the same thing. And this is coming at a time in which we're being told everything's fine, but clearly something is going on. There is a serious situation going on in Hong Kong, and it's having a direct impact. For example, you can see the desperate homeowners slashing prices by 20%. There are some examples here in this article out of the South China Morning Post, if you'd like to check them out, just showing you the fact that when there are problems, geopolitical problems, financial problems, anything really, this could have a direct and immediate impact on asset prices. I just wanted to make one quick point. In another article related to what's happening in Hong Kong, you could see at the very bottom of this, banks were negotiating with logistics firms to refill cash machines as 5% of them had run out of money. And as you can see, it's just a small percentage, 5%, but the point is very simple. We take this for granted. We go to the bank to get our money. Our funds are kept inside of their digital vaults. And we expect that the time comes to take our money out, we're going to be able to get it. However, in many cases, there are problems. There has been an unlimited amount of stories from people who have said that they are trying to get their money out of the bank, and for whatever reason, they had a glitch, there was a problem, their card wasn't working. Then of course you see other situations in Greece where they had capital controls for such a long period of time. Anything could happen. I'm just trying to suggest to you that when they tell you everything's okay, but the evidence points to otherwise, that we should be paying attention. Retail sales in Hong Kong have contracted considerably. It's going down maybe minus 25%. It looks like year over year. This is having a dramatic impact on the economy, of course. Just wanted to show you that because it is interconnected. Here's a couple points, starting with the ISM manufacturing moving down to 47.8. The United States is definitely feeling this, but these statistics appear basically the same in most places around the world today. This is something very interesting. You could see the Conference Board's consumer confidence, present situation, and expectations. And if you see this, it's going higher and higher and higher over the last several years since the financial crisis. Most people would say that's fantastic. That's a good thing. But if you look at it historically, we have a problem because every time we see in previous instances, we end up encountering this similar pattern. What happens? When the confidence is at its peak, it's already too late. And this is something that I have noted over and over and over again. This is the Wile E. Coyote effect. Essentially, you get to the end of the cliff and don't even realize that you've actually fallen off. And then you know where you're headed. This right here is just some other facts talking about what's happening in the Eurozone. Eurozone grinds to a halt. That's coming from the top paragraph here, just showing you that is basically contracting right now. If you look deeper, you get some even more serious details below. They're just showing you what's happening in Germany. If you look at certain statistics, it shows you that Germany has fallen into a recession, though officially that hasn't happened yet. Germany's services PMI sinks to 51.4. All around the world, we see the exact same thing: contraction, slowdown, and stagnation. I'm going to end the video there. If you found it informative, hit that thumbs up button. It really does support me. If you want to build a business, if you want to make money, if you want to learn how to sell on Amazon, this course is for you because it's free, 100% free. Check it out at the AmazonGPS.com. If you're interested in learning about the foundation, the history, the asset classes, how to profit, how to make money, reducing your debt, everything from A to Z, these two books have what you need. You can get the information in the link in the description. If you want the audiobook, that's available at themoneygps.com. Hang on a second, don't go anywhere. This video has been going crazy. Check it out. I'll see you there.